Hi, I'm Eric.
And I'm Dick. We're the Annuity guys.
Dick, annuity sales are like breaking records quarter after quarter.
Eric, there's a lot of dynamics going on. In the financial realm, we've got markets at all-time highs.
Right. So why would you want an annuity? The markets are at all-time highs.
Well, and I think there's an intuitiveness out there with consumers, individuals that are looking at their retirement and they're saying, hey, is there a better way? I mean, they're very pleased that their portfolios have, in some cases, bounced all the way back or gotten a little bit ahead, but they're kind of like, hey, I'm approaching retirement. I'm not going to fall in the same trap. Yeah. And I would also go on to say that annuity guarantees have really, when you really think about it, they've never been higher in terms of guaranteeing that future income. And what I'm referring to is the fixed index, the hybrid style,
right,
in deferral.
Yeah,
right.
the roll-up guarantees, the income for life guarantees, basically.
Yes.
Yeah, and I think what we're seeing is part of the growth that is really attributed to the growth in annuities is from this fixed indexed style, which, and we talk about the hybrid,
correct,
which you add that income rider guarantee onto that indexed potential. So you take the rate guarantees, you add a little bit to it with the indexing component, you get a little bit better potential for growth than what's available with some of the, let's just call it more other safe money guarantees from the banks and like.
Right, dramatically better, really, when you're comparing it to the banks.
Well, I didn't want to make it sound bad, but when you're not going to even pay them 1% for their money.
Well, generally, what we've seen is the variable annuities kind of dropping off, leveling out in some ways, but even dropping off in recent quarters. We've seen fixed annuities breaking all records. So some of that would have to do with folks that are kind of looking at the low CD rates and they're saying, hey, there's got to be a better way. But what's really driving this is just what we started off talking about, and that is the hybrid style annuity, which is really nothing more, folks, than a fixed indexed annuity with an income rider.
Right. It's accounting for over half of the growth in that fixed bucket of annuities. It's people are being attracted to this, and we've kind of, I don't want to say proponents of this style of annuity, but we really like a fixed indexed annuity with an income rider for protecting your future retirement needs. So
well, and Eric, just like what we were discussing earlier before we started our video, is the fact that it gives folks this ability to kind of hedge, to kind of have the best of both worlds, that when the market's high, like it is right now, those folks that understand this, that are going, hey, there's a time I can pull that money off the table, and yet they can still get some reasonable growth.
Right. Well, and what I like about, do you think a correction's coming?
I think everybody thinks a correction is coming.
And this is where I always say, I
anyway.
guarantee you that the market is going to correct. Just don't ask me when. But what people about an indexed annuity is, let's take the floor. If the markets continue to go, hey, I can continue to rise with the market. Yeah, I know I'm not getting full participation.
Correct.
But for giving up some of that upside growth, I'm giving up all the downside risk.
That's the biggest thing in retirement. That's what folks are concerned about.
Right.
And they've seen the rug pulled out from under them. I mean, go back to 2008. And 2008, right. I mean, twice in recent times. And prior to that, we had this long run-up from the early 80s all the way up, through 2000, where all the indexes and the market in general did so well. And it kind of lulled people to sleep. It was like, we can't lose.
Right.
But we all know that's not true anymore.
Yeah, I remember getting a book when I was in my youth that said, hey, if you put money in a mutual fund, the average you're going to get 12% every year guaranteed.
Yeah.
So just keep putting money in mutual funds and don't worry about it. And then all of a sudden, boom, now we lose 40% in a year, and maybe that's not so bad.
And the average investor out there, according to these Dalbar studies, they don't get anywhere close to that.
It just proves that for the average person is really cruddy at market timing, because you want to get in when the market's already heated up and going up.
Somewhere between 3 and 5%, the average investor. So it really shouldn't be any surprise that when indexed annuities can also equal that very safely in those realms and give the contractual guarantees for future income, that that's what's driving these sales, Harry.
Right. And so for folks that are looking at either one of those sides, the index side, if you just want to participate in some of those gains and just
keep your money safe. Right.
And then we've got the hybrid style where you toss that income rider on and say,
yes.
hey, you know what? This money I know I'm using for my future retirement income. Let's safeguard it. Let's protect it. I know it's going to grow guaranteed. And when I'm ready to turn that on, it's already there for
Absolutely.
me.
How much money should folks put in annuities? What percentage of their portfolio should they put into annuities?
If you go back to a previous video, I think we said 50% was the magic number according to research. But I always say the minimum amount necessary to guarantee your income, foundational income, is probably the baseline I'd like to start with.
Exactly, and that could be anywhere from 10% to 75 or 90%, just depending on what your assets are and what your income need is. There's really no generic, this is the right percentage.
This is the number.
Thank you.